Let's take a look at where markets closed out here. Running for cover. Honeymoon is over. Take your superlative and run with it. Jeremy Siegel like the honeymoon is over. So the S&P 500 ended today down just 1.8%. I say just because it was a lot worse earlier, down by about 2.8%. And that would have been the worst slide since 2022. So we did see a little bit of volume come in at the end of the close. We did see off the lows of the session. The VIX, though, having a big jump in a very short amount of time. You look at the VIX curve from just a week ago, a huge re-rating now has taken place within volatility, which you can be sure has then affected those systemic funds that track volatility and have to follow the trend, like CTAs or vol funds. That's going to exacerbate any kind of selling that we see. The money is very clear where it's going. The money is going into the bond market, particularly the front end, and into the yen. 146. Remember when it was 116? We were talking about that intervention. Nope, 146 for dollar yen is the yen, as well as the bond market shine for some safety trade, Scar.
Yeah, so some big moves on the macro front, some big moves on the micro front, particularly with Intel losing 26% on the day, the biggest drop ever, at least in data that we track going back about 40 years. Clearly the worst performer in the S&P 500 as well. It gave soft guidance for this current quarter and also indicated it is going to cut 15,000 jobs and suspend its dividend. The CFO talked about liquidity in the press release, which definitely raised some eyebrows. Amazon.com coming out with results as well. Again, AI spending unnerving investors. This is a theme that we've seen across the Mag 7 names. It was the case for Amazon as well. That stock having its biggest drop since April of 2022. And I did want to end on a company that did better. Apple also came out with earnings up 0.7%. Tim Cook talking about the AI features, the Apple Intelligence features will spur phone upgrades when the iPhone 16 comes out and the iOS is ready for it. That'll be in the coming year. It's not going to start right away when the iPhone launches in September. But we got to go back to the broad market overall because our top story this hour is really about the losses that we've seen. At its low, the stock market was holding its best, or I should say its worst jobs day in 2 years, its biggest decline on a jobs day in 2 years. And that pushed the Nasdaq, seen here, into a correction, down 10% from its peak. While bonds, they rallied hard, pushing yields lower. Bad economic data is no longer good news for risky assets. Traders are now pricing in a full percentage point of rate cuts this year, and debate is really generating on whether we are on course for recession.